So it's Gary Cohn, it's Sheila Bair, Blythe Masters talking at LME Week last week about how commodity companies can use blockchain. What does that tell you about the validity of this going forward?
Well, I think it's the technology, blockchain technology, which the public all know is underlying Bitcoin, has a real chance to be a catalyst for change in the world of finance. And that's because it moves data, and it also applies code, computer code, across a decentralized network. So I think that's why you see the likes of Sheila and Gary Cohn, and even I'm teaching at MIT blockchain technology, and the class is crowded. There's a lot of people that want to know about this technology.
So how do you regulate it?
Well, it's really important, I think, for this, if it gets broad adoption, if we really think the crypto world's going to be part of the future, it needs to come inside a public policy envelope. That means we need to guard against illicit activity, and yes, we need to protect investors. The crypto exchanges, big exchanges like Coinbase, need to really come within either SEC or the CFTC, the agency I once was honored to chair. Inside of something to protect investors.
Let's distinguish two things. One is cryptocurrency and the other is blockchain. Because cryptocurrency may rely upon blockchain, but you can do things with blockchain that you don't do with cryptocurrencies.
Right.
Do we need to regulate blockchain? Because we don't normally regulate computer programs. We don't regulate JavaScript.
David, I couldn't agree with you more. We should be technology neutral to promote innovation, but still in being technology neutral, I'm agreeing, not regulate the blockchain technology, but just ensure that its application, like cryptocurrency, investors are still protected. What does that mean? That we make sure there's not fraud and manipulation to the extent we can in the Bitcoin markets.
At the same time, this is to those of us who are not computer programmers, very sophisticated. It seems to be moving very, very fast, migrating. Do we have the personnel within the federal government to actually be able to understand this enough to really know whether there's fraud going on or what's going on?
Well, it's always a challenge. That was true when the internet came along in the 1990s as well, and you're right. But I don't think that means we give up. We still should try and protect investors. And then there's more confidence in markets. And where there's confidence in markets, then more people can participate.
What is the likelihood of a cryptocurrency futures options market?
Well, we already have something called a Bitcoin future on the Chicago Mercantile Exchange. There's even futures on some other contracts called Ether as well on overseas markets. Now, you're asking whether there be an option on that future. I think it's in our future, to excuse the expression, but it's somewhere in the next 6 or 18 months. I think it will be there.
How relevant will that be to then help form regulation? Like, what's the feedback loop for that?
Well, I think to the extent that the international regulators can assure for more confidence, that the viewers of this program can say, all right, I'm comfortable, I can do this, and big asset managers can invest, you'll see more potential adoption. But at the core, also the technology, David, blockchain technology has to have a place. And right now it's more hype than reality. The largest uses are still quite small. And the technology, I think, is probably 3 years and maybe 5 to 10 years away from really being able to be scaled. Visa moves 25,000 transactions a second. Bitcoin moves 7 to 10 transactions a second. So there's still, but I'm an optimist. I think the scaling issues will come.
So assuming we will have the regulation you described, we're sort of like back in 1933 with securities. You know, where should that regulation come? I mean, you're obviously from the CFTC, you believe in the CFTC, but why there rather than the SEC, for example? Or maybe there's an entirely different new regulatory body.
I'll even be regulator neutral as well as technology neutral. I think the pure cash cryptocurrencies like Bitcoin need more protection, and probably more protection than, frankly, even the oil markets or corn and wheat. Whether that's the CFTC or the SEC, I'll be neutral. I think the CFTC has good skills. I think those crypto assets called initial coin offerings, that it's like the old duck test. If it quacks like a duck and waddles like a duck, it's a duck. These things are like initial public offerings.
What do you feel like is the appetite for other exchanges, other countries like South Korea, for example, to regulate as well?
So you see around the globe a lot of countries saying we have to guard against illicit activity. We have to ensure our tax base stays strong.
Sounds good. Everyone's going to want to say that, but
right,
the reality.
Right. But the reality is it's really hard to implement. It's really hard to implement. The investor protection side, I'd say it's all over the lot. There's small population countries like Malta that want to attract and say, come hither. They want the jobs. They want the CEOs to land there. And then some countries like China and India are very hesitant. And officially, they ban initial coin offerings. But underneath, the economy still is, there's a lot of people trading in Bitcoin.
So finally, Gary, how confident are you that we could have regulation without inhibiting the innovation? Because it's really in the nascent stage. It's very early going. I think a lot of people who are involved in Bitcoin and blockchain would say, don't hold us back.
They would. I would say you want some form of regulation. You want traffic lights and speed limits, because then the public is confident to drive on the roads, in this case, the crypto roads. Right. And so I think the two can coexist, but it will take a number of years to sort through and get the balance right.